It was once one of the country's biggest growth drivers, but China's property market has been in a slump for over 5 years. Real estate values continue to plummet, and developers that have racked up enormous debt are on the brink of collapse. There was a glimmer of optimism when the government launched measures to end the crisis. But why has China not been able to pull itself out of the property doldrums? And what does the future hold for its housing market? I'm Divya Gopalan, and this is Connected on TaiwanPlus. To help us make sense of China's flagging real estate market and what it means for the wider economy, we're joined from San Diego by Victor Shih. He's a professor and director of the 21st Century China Center at the University of California, San Diego. Great to have you on the program, Victor.
Thanks for having me, Divya.
It's absolutely our pleasure. I'm going to start with an overview of what is happening in China. What would you say is the current state of China's property market?
It's not doing well, has not been the case for at least 2 years since the big deleveraging campaign carried out by the central government in late 2022. I think surprising to some, although not to me, that the bottoming process is taking so long. We're still seeing dramatic decline. Not so much, I guess the good sort of mildly good thing is not so much in terms of prices anymore, but in terms of housing starts and investment is still very dramatic, sort of negative 20% plus decline compared to last year. So I think the bottoming is an ongoing process, and we may have some more distance to go.
You mentioned the deleveraging campaign. Can you explain a little bit about that and why you think the Communist Party were not ready for the impact that would have?
Yeah, those are two kind of very big questions. So deleveraging was because the top leadership saw that the housing market and the housing industry, real estate industry, was absorbing a lot of financial resources from the financial sector. By even before COVID, by 2019, 2020, and they wanted to do something very resolute about it. And to be fair to them, I think there was an incredible amount of froth in the housing market, by the late 2010s. And of course, exemplified by companies like Evergrande, which we'll talk a lot more about. But you have not just Evergrande, but other property companies borrowing, well over 100 billion US dollars to build various projects across China, with the expectation that they will sell the bulk of what they build, that there will still be very healthy demand for the housing stock. And of course, investors in the pre-COVID period, they were very enthusiastically buying up a lot of housing stock with the expectation that prices would still continue to rise, even though in many cities, housing prices had risen to a level that was, 20 times, 30 times annual average income of households in those cities, which is quite extreme and, even more extreme than places like London, Singapore, and even Taipei. Taipei, of course, is not cheap at all. So then of course, both the property developers and increasingly by the late, in 2019, 2020 period, a lot of the households were borrowing a lot of money to buy houses. So that triggers of alarm bells in Zhongnanhai, and there've been a lot of discussion about how to arrest the rise of the property market, especially these frothy property prices and the leveraging. And so what they did was they rolled out these very draconian deleveraging policies targeted at the property developers. So not so much the buyers. So the buyers already faced all kinds of restrictions on how much they could borrow by that point, especially in these very frothy markets like Shanghai, Beijing, and Guangzhou. But the developers also, were met with very hard ceilings on how much they could borrow based on the assets that they held and based on the cash flows that they generated. And for some developers, especially companies like Evergrande, which was used to not being restricted by this, they would just borrow a huge amount of money for one project and then use the borrowed money from that project to finance the next project and so on and so forth, which is extremely dangerous because you don't even know if your first project is going to pan out, is going to sell yet. You're already starting another project and another project. So that caused enormous financial difficulties in many developers. It led to many thousands of projects not being completed because the financing got cut off. And then the ensuing spiraling downward of the property market in China.
Which is what we see today. And as you rightly said, we need to talk about Evergrande. They've just delisted from the Hong Kong Stock Exchange. Can you explain why they were such a huge proponent of the property market and basically, despite the size of China and the vastness of its property or real estate sector, Evergrande still was a massive player.
Yeah. I think one thing that people don't appreciate today is how important politically Evergrande was. Because if you think about it, so the one feature of Evergrande, you had other companies like Soho China, which focused on just Beijing, right? And other property companies which just focus on Shenzhen or Shanghai or whatever, single market players. But that was not Evergrande. Evergrande was famous for having hundreds of projects across hundreds of cities ongoing at the same time. So you can imagine so one kind of interesting fact about China is China is a big place. It has maintained pretty high growth for the past 30 years. But the growth has been concentrated, the kind of healthy growth that we think of, export manufacturing, technology, and so on and so forth. That kind of healthy growth was and still is concentrated in a small handful of cities. Beijing, Shanghai, Guangzhou, Shenzhen, Hangzhou, Wuxi, places like that. Outside of these main export and technology hubs, there really is not that much going on for the majority of Chinese cities, besides the government, besides infrastructure, and besides real estate construction. So then income Evergrande, flush with cash, and we can discuss why they have access to so much money. It's kind of a mystery, it's, I suspect there's sort of some high-level political support for the company. Who knows? But they were flush with cash. They go to the local party secretary and, basically tell them, guess what? This is your lucky day. If you're able to grant me this and this parcel of land, I will make sure that there's billions of dollars in investment in your city because I'm going to build a mega size residential apartment project in your city. So the company, of course, was welcomed everywhere that it went. Different localities would lobby the senior executives in the company to start a project in those cities, because if Evergrande were to start big projects in a city, that will help the growth of some of these smaller cities, especially third and fourth tier cities, and potentially help the careers of the senior leaders of the cities. Right. So as a result, politically, it played a very important role across hundreds of cities. I mean, we have to remember there are like 400 or 500 medium-sized cities in China, and they all have party secretaries. They all have mayors who are politically ambitious. And to the extent that these big real estate projects can boost the growth rates of some of these cities, they want someone like Evergrande to come and start projects. And if you actually hang out with some of these city leaders in that period, sort of in the early 2000s to 2010s, which is what I did to some extent, that's all they did all day long. They just try to get people to invest in their cities. Today, probably a bit less of that. So politically, they were very powerful. They had access to credit, and they took full advantage by having hundreds of projects across China in some cities where, the economic future most likely is not going to be very bright, Western China, Northeastern China. But nonetheless, here's a company willing to invest billions of dollars in some of these cities. And I think at the highest point, they borrowed, the total liability of Evergrande was something like 300 billion US dollars. So that's the GDP of a, not even a small country, but like a medium income country with not an especially large population, maybe. So it had financial and political impact, which was at a national level.
So then that will bring me to my next question. And you mentioned the amount of borrowing it had. Now, Renmin University research estimates that real estate still makes up about 25% of China's GDP. So given that, and we're throwing massive numbers out here, how much would that be a reason for China's, economic growth engine literally coming to a standstill?
Slowing down. Yeah, well, it's not quite a standstill, but yeah, slowing down quite a bit. Yeah, no. So yes, exactly. So I guess one point that I left out earlier was that not only did this property investment led to GDP growth, it also justified a lot of infrastructure construction, which also drove GDP growth in hundreds of cities across China. So basically, the financing model of local government since the early 2000s, but especially since 2008, 2009, was that local governments would use these financing vehicles. And the financing vehicles are basically these empty shells. It starts out with nothing. Then the local governments allocate a big piece of land to the financing vehicle. The financing vehicle then takes this piece of land to the bank and say, well, hypothetically, this piece of land is worth $1 billion because some property developer will come along and buy it at some point. So on the basis of the hypothetical value of this piece of land, which is $1 billion, you can give me a loan for $700 million, let's say. So that's usually the asset to loan ratio. And a bank, being state-owned, would pretend that they believe it. They're like, okay, we believe you. Here's $700 million. Local governments would use the $700 million to build the road, the gas pipelines, electricity grid that they needed to connect this new piece of land to the utilities and make it a livable place, essentially. But this myth needed an actual property developer at some point to come along and say, okay, guess what? I will buy this piece of land for $1 billion. And that's the crucial role that companies like Evergrande served, was that they came along and say, okay, we will actually buy this for $1 billion or whatever hypothetical value you had. But you have to build the infrastructure, and the local governments would say, no problem, because we already borrowed the money from the bank to build the infrastructure. So there's going to be a road, there's going to be electricity, there's going to be gas connected to your new apartments. And everything was in this kind of virtuous cycle as long as a property developer actually came in and bought this land. And all the local governments across China, they all had these enormous land banks, what are called land banks, which is land that local governments have cleared, sometimes by force, clear the original residents. Sometimes it's just a piece of farmland that they just convert into residential land. And then they would have this hypothetical value, trillions of dollars of hypothetical value assigned to all these pieces of land, on which they can borrow trillions of dollars from the banks to build infrastructure. So for a while especially after 2008, 2009, I would say kind of, the bulk of economic growth in China was propelled by infrastructure investment that was financed by the hypothetical value of land, which was supposed to be sold to property developers, as well as the property investment itself. That propelled like 70 to 80% of the growth in the sort of 2008 to 2018 period, I would say. And it was kind of a virtuous cycle. But one ingredient that was needed was an endless amount of money, from the state banking system, which financed both the infrastructure and also the property investment.
Right. Going back to, and as we can see now, that vicious cycle, China's housing market, though, is continuing to slide. Year-on-year data from the National Bureau of Statistics China shows that in March 2025, new home prices fell across most major cities, with first-tier cities down nearly 3% and third-tier cities hit the hardest, almost 6%. Second-hand homes dropped even further, with prices plunging more than 7% nationwide. So it seems like there's already an oversupply problem. Some estimates suggest that China has around 60 million vacant homes. Is there a silver lining to all of this? Does that mean that perhaps maybe those who couldn't get on the property ladder before can now get on it? Or is there any glimmer of hope there?
Yeah, so that's one potentially good effect, is that prices were getting so high, again, by the late 2010s, that many young people could not afford it. But now you have this other problem, which is that job creation for young people is so slow that even though property prices have come down, many of them still cannot afford properties because they don't have a job. So that's not so, well, somewhat related to this whole property thing. So one positive impact is, prices have adjusted and continue to adjust. But as I said at the outset, I think the adjustment period is going to be ongoing for, some other, another period of time. Don't really know exactly for how much longer. Some markets like Shanghai has begun to turn around, as your statistics show. But other markets, even surprising to me, like Guangzhou, for example, I would have thought that Guangzhou would also start to turn around, given the vibrancy of the tech industry in Guangzhou. But it hasn't. Still a pretty steep drop, partly because I think it was very frothy previously. So the more froth, the harder the adjustment, whereas in Shanghai is not as big of an adjustment. There's some rumors that, Xi Jinping is finally serious about boosting consumption somehow. Although the question is, with what money are you going to boost consumption? But if that is somewhat successful, then that's going to ultimately lead to higher demand for housing. So you have both price adjustments and then also more support from the government potentially, that can ultimately boost sort of housing prices and sales. The problem is that the inventory is still enormous, and the inventory is actually growing if you count both the amount of housing that has been completed already and also this housing stock that's still under construction. There is still hundreds of millions of square meters sitting out there. So I think the adjustment process for third and fourth tier cities can potentially last for many more years. Whereas for a select few first tier cities, we could be turning around, in the near future. But for the vast majority of second tier and even some first tier cities, there could be another year or two of adjustments.
And at the same time, you have a large number of home buyers sitting on some very huge mortgages that cannot be realized anymore. So what would you say is the impact on those home buyers or your average person who bought a home in the past 5 to 10 years?
So there's some somewhat positive news, which is unlike the case of the U.S., where you have a large number of households which borrow, enormous sums of, money, leverage to the hilt, borrow 80, 90% of the value of the housing stock, of the value of the homes that they're buying. That, by and large, is not the case in China. You basically have people, Gen Xers or older, who bought in the early 2000s. They're still above water, and most of them bought with cash. They didn't borrow money. So then, even if there's some price adjustments, I mean, this is the case of many of my friends in Shanghai and Beijing. They bought earlier on, and even though they're not happy with the price decrease, it's still a lot higher than the price at which they bought in the early 2000s. You do have some number of buyers in the 2010s who bought at very high prices and also borrowed money to buy. But again, if you look at the aggregate statistics, the picture is not nearly as alarming as was the case in the U.S. In 2007, 2008. In the U.S., you had household debt, which was 100% of GDP. In China, right now, it's 55, 60% of GDP, which is not especially high. And that's like all household debt, right? Including credit card debt and other forms of debt. I mean, you are starting to see some actually problems in the consumer loan market, actually in China, especially for lower income households. But for middle class, higher income households with mortgages, by and large, it's still okay. You do see some very problematic cases, and there are thousands of cases like that out there where people borrowed with a mortgage to buy a home, but because the developer went bankrupt, they never got delivery of their homes. This was the focus of central government policies in 2023, 2024, which sort of resolved some of those cases. But I think you still, China is a big country, so you're going to have thousands of people who are still very unhappy with not getting the home that they bought delivered to them and still paying mortgages. But I think those cases, seems to me, would be in the thousands instead of millions of cases.